You ready?
Yep, I'm ready.
Awesome. Investors, welcome back to the channel. As you know, my name is Ari Gutman, and I'm coming at you every single week with a brand new Masters of the Market dividend talk. And here with me today, we have the average Joe on YouTube with his very own channel producing, of course, dividend stock content. But the reason I have him on the channel with me today is because he has nearly 30 years worth of experience in investing. So to hear directly from him, we have the average Joe with us right here, right now. The first question, Joe, I want to ask you is what is the value right now of your portfolio?
Well, I have several portfolios. The portfolio that's on my YouTube channel is the value right now of that is $210,000, and that's my dividend growth portfolio. But
Wow.
my net worth right now is at 1.4 million when you count
Wow.
my IRAs, cash, as well as taxable brokerage account. Right now, I don't own real estate, but that's going to change here soon because right now I'm a renter, but I'm building a house right now. So
Amazing.
mhm.
Amazing. Wow. 1.4 million. Now you said 210 is in the brokerage that you use for YouTube. So
Correct.
is
Yeah.
all of that from dividend investing, or did you start growth investing, or how did you really accumulate to 1.4?
Sure. I'll go back and kind of give you my background story. So I was raised middle class. I have a brother, and I was raised in the Midwest. And my dad was the breadwinner, and he worked in IT. And so I kind of watched him progress through his career. And his advice was he was a manager, like a director. And I
Sure.
saw him go through a few layoffs. And he said, your job is more safe if you're not in management. And that really stuck with me. So I out of high school, I kind of took some gap years. I didn't go to college right away. I worked a lot of odd jobs where I cleaned office buildings. I was a private investigator for a year. I worked as an HVAC apprentice and other various jobs. But the one common thing they had in common was it was low paying jobs. They had no benefits. I was saving no extra money. And at one point, I even had to donate plasma just to buy food. So, but that was, I still had the backstop of my parents, but I was too proud. I just wanted to do everything on my own. So, it was tough times. I think it was a good experience to kind of to live poor, and it kind of helped me live within my means and to grow a gap. And when I did, what I did was I did realize I had to get a full-time job, and because I had several part-time jobs, and I had to get a full-time job that had benefits, a 401k, things like that. And once I started doing that, that's when I had a gap, and I was contributing to a 401k, of course, a very low amount to start with. And I did get to the point where I did max it. But, I started out the first job that I worked where where it was not hourly, I had a salary, it was $26,000. So started pretty low and just kind of worked my way up a little bit in IT, but I stayed out of management. And then halfway through my career, I moved to procurement. So kind of the money side, kind of touching into finance a little bit. So,
Wow.
so that's kind of,
Just before we jumped on, I will share we were speaking briefly, and a part of your story that I mean really stands out to me is actually, when you shared that you were donating plasma just to buy
mhm,
groceries. And I want to highlight that, but so your channel, The Average Joe, right? You're
mhm.
truly not the average Joe, far above the average in terms of the humbleness that you carry and how you present yourself. I mean, I'm sure you can attribute a lot of that to your experiences, but I feel so much that once people are in a position, whether you're in front of people, you're speaking, you're on YouTube,
Mhm.
or you have the 1.4, it's so easy for the ego to kind of pop back in. And it's humbling for me to even be on with you and knowing your background story and knowing how far you've come. what would you say? I mean, I know from the experiences, of course, it's had an impact, but what would you say has really stuck with you from such humble beginnings to this day to number one, not give up? Because let's face it, and I experienced this a lot when as a younger guy, right, as a younger dividend investor, why not just go growth investing? Like what
Mhm.
how did you know let me just keep at dividend investing? Why didn't you give up on it? And why dividend investing in the first place?
Yeah, so I'll give you kind of a background in my investing history. I started investing in stocks. Well, actually, let's go further back. My dad kind of taught me investing in stocks back in I would say the 80s when I was growing up. And there was one of my grandparents gave a gift to my brother and I think it was like $500. My dad said, "Hey, let's put this into a stock. And if it goes down, and so I had nothing to lose. I was at least going to have that money, and I was guaranteed that money, and also it could grow. So I'm like, okay, I'm down for that. So
Deal.
and it did turn out that it did make more money, and I wound up selling it. I needed a car, so I did finally cash that in. But one of his lessons was I think he had McDonald's stock at the time, and he would tell me like, the dividend, how it wasn't constant; it was always going up, and kind of taught me kind of a yield on cost lesson. But it didn't really stick with me at that time. And to me, investing was you buy a share of a company and you wait for it to go up and you sell it. And early on in my investing, there was a growth stock called Level 3 Communications, and I think they're off the board now. But uh, that one went up to like $100, and it dropped back down to like the single digits, and they finally got pulled from the exchange. And that was one I used to. It seemed like it would go up a couple dollars and down a couple dollars every couple weeks, and I was buying that at very small amounts. Like we're talking like a couple hundred dollars, things like that. And so I was making a little bit money here and there, and it worked for a couple years until it didn't. And until it dropped and it never recovered, and just a few $100 off of that. And I got out of stock investing, individual stock investing, for probably 20 years after that point because of uh, how I felt about that. So, in my investing then it was just in the 401k for a long time. So,
Did you
uh,
max out the 401 or was it just
not not right away. I think when I first started my career, I was probably doing the 3 to 5%, whatever the company match was, and
right?
I didn't really have much of a gap at that time. So that's all I was really able to do, and I slowly ramped it up as I got raises along the way. And I did max it out, but today I am not maxing it out right now. So I think I've done most of the heavy lifting in my IRA. My IRA, I think it's about $750,000 just an IRA 401k. So
So
I'm
you're
pretty
set.
well set up there too. Yeah, yeah. Not that I'm coasting, I'm still contributing
Right.
to it, but I'm not maxing it out.
Wow.
So,
Wow.
but yeah, I didn't get into the individual investing really until I was following one of your previous guests, who is Jason Fieber.
Yep.
And yeah, I followed his story. He had a website. Yeah, I think he still does, Dividend Mantra Way. And I actually followed his dividends as they were coming in, but he didn't really share like exactly what he was buying. And
Sure.
that's where I kind of filled in that gap. Was I'm showing complete transparency of what's in my portfolio. I'm sharing a spreadsheet, and I'm doing videos of showing here's what I'm buying. And not that it's investment advice, but just kind of show it in real time. And I
Sure.
don't intend on charging for the information either, because I want others to see it, to see how you can kind of grow that income. Because my philosophy kind of changed over time, especially when you see a few market crashes like 2008. Y2K tech bubble and just with COVID, that I saw my net worth slashed by hundreds of thousands of dollars. And it's like, well, if you're trying to retire during these times, it may be put in the back burner until things
Sure.
recover. And then I realized, I think it's really cash flow is what you need. As long as you have a safe cash flow, it doesn't matter how much the pot is worth. You can pull the trigger once you have enough cash flow. And dividends is the best way, I think, to generate that. So,
Wow. Wow. So there's so many questions, brand new questions that I have.
okay.
And, I actually want to go back to that moment that you had when, even in the midst of losing money, but more so, right, that first stock that you really lost out on. But I think
Mhm.
what you gained from that was certainly experience. Honestly, I think every
Yeah.
dividend investor, before they become a dividend investor, they start with this, let me try my odds at some growth investing. What I've
Hmm.
come to realize in my experience, right? Likewise, you can see a lot of these, hot stocks that are talked about. You want to get in, you want to get rich by Tuesday, and you try your odds at them. The problem that I've found, for myself, and I think just even speaking with so many people, is that we get emotional, we sell at the
Yeah.
wrong time, perhaps we
Hmm.
even buy sometimes at the wrong time. I want to go back though to that moment that you had, and you also gave up on investing.
Hmm.
What was the trigger, for you that was like, let me get back on the horse now, let me start investing now? Because to stop investing for
Hmm.
20 years, it's a lot of time. And I want to follow that question up with knowing what you know right now. How would you build back, right, this portfolio?
Sure.
You got that time back. Like, how would you start? What would be the moves that you would first make?
Hmm. Yeah, and to be clear, I was still investing, but it was primarily through my 401k,
Okay.
and so I was still investing, but it was in mutual funds, ETFs, things like that, not individual stocks.
Sure.
So I don't know. Go back to your question. Uh,
The very first one
mhm.
was that feeling of when you lost the money.
Oh,
What got
yeah.
you back on the horse? And
Okay,
the second
sure.
question would follow up
Hmm.
with, how would you restart today if you were back in those shoes as Joe, X amount of years ago?
Right. Yeah. What kind of the catalyst for me to invest in non-retirement was there was a gap that was building up in my savings accounts, and quite significant. It was tens of thousands, and it wasn't being put to work. And I was married at the time. I just got divorced a year ago. And so my wife and I, ex-wife and I, luckily we were very aligned with
Sure.
finances. And we looked at it, we just realized, hey, we need to invest this. So we went to, and we got professional help. And so we did have an advisor, and we later did fire that advisor because of the fees. They were just putting us pretty much in Vanguard funds. So we got rid of and we are paying a 1% fee on top of that. And so what we did was we just went to Vanguard and just purchased those same ETFs, like a VTI BND, pretty much. So that's what it was. Our money wasn't being put to work, pretty much. We realized that people who become wealthy are invested. So that's pretty much what changed that.
Would you say that she was a major influence there in pushing you towards getting back on the investment horse, or?
Yes, we were both, yeah, aligned. We were both in lockstep with it and just knew we had to do something. We couldn't just collect interest like we were forever. We would not get wealthy that way.
I'm
So,
I'm always surprised by, when you're having a conversation with someone, they have a ton of money in their savings account, or they don't
mhm,
have very much in their savings account, but they have enough to begin investing. And
mhm,
you ask them, do you have plans to invest? Do you want to invest? I want to. I'm waiting for the right time. What's crazy to me is even in the last 3 years, with inflation being as high as it was, how
mhm.
many people are just literally burning money, not having money in the market. Um,
Right.
I think too, I was just on a call the other week with the Dividend Diplomats, if you're familiar with their channel.
Oh yeah.
We actually got into the topic of conversation about how important it is to align with your partner
Mhm.
financially and have those financial goals. So I want to throw this question now out to you when it comes to your ex-wife, right? When you
Hmm.
shared that you guys were aligned with your finances, can you walk us through, like, did you sit weekly together, monthly? Were you aligned in terms of a budget, or what did that look like? I think so many young investors out there are missing
Yeah,
the point here
that's
on being relationally, financially together.
yeah.
Aligned.
I I think we were both frugal. We didn't have I do have some expensive habits with I'm a musician, a cyclist, but I try to earn money on the side to try to pay for those. So I wasn't spending too much money. And my ex-wife, she didn't really spend a whole lot of money on clothes or jewelry or anything like that. Some, but much less than most. So uh, we just we were just aligned. We talked to each other about big purchases. We wouldn't go out and buy a car or furniture or things like that without discussing it. So but we had a goal, and but we didn't have a really a true end goal. I think we could have both retired earlier. One or both of us could have just stopped working, and we even had talks about that, where one of us could just stop working. But we're both still working at this point. But my plan is in a couple years is to go part time,
Sure.
and but we'll see if my employer will be willing to accommodate that. We'll see, but
That's when you just let them know how much is in your
yeah,
account and say, I'm dividend.
no, I don't. They'll say they're paying me too much with it, which they really aren't. I'm not a very high earner either, so and that's you know, the
But
thing. A lot of people, yeah, I'm not
this
a.
is the part of the reason I wanted to bring you on, because so many, again, like so many people share, I can't get invested until I'm earning X. I can't get
Mhm,
invested until I have Y amount. And so I'll go back to this question, right? When you got
mhm.
back on the investment horse, let's go back to Joe, right? Like 20 years ago, or when you got back to really investing into individual
Yeah,
stocks. If you had to go back to that Joe, how would you build your portfolio from scratch? Knowing like your humble beginnings, you're not making that
yes.
much. What's your first chess move?
Yeah, it would be 100% in something like VTI or VU. No
Heck,
bonds, nothing else. No crypto, no nothing else. No individual stocks. I would just be 100% in that and nothing else. And
what's step two? What's
well, well, I'll start out when my ex-wife and I, when we finished school, we had some student loan debts. There wasn't much. I think it was like $15,000. We
sure?
paid that off right away, and we had some credit card debt. It was like $5,000. So we wiped the debt out. You got to make sure you have no debt. I know student loans, that was 20 plus years ago. I think the student loan balances are a lot higher now, and that's a big challenge with people. And I would just try to eliminate debt and then control your housing costs. That was one thing I think we spent too much on our housing,
Sure.
also on vehicles, and I'm to blame for a lot of that too. I like cars, and but
Humble and accountable.
yeah, yeah. So the car I drive now is a 10-year-old Honda Civic Si, paid for long ago, and I'm just going to drive into the ground. But just I would watch your cost on housing, cars, and food. They say those are the big three, and just try to grow that gap. But don't be miserable either. You don't have to save 75% or even 50%. If you can save, I think 30%, 25, 30% of your income and invest it, put it into that ETF I mentioned previously, I think you'll be a-okay. And that's one thing I did when I was like picking my 401k things early on. I was probably too conservative, where I had bonds in there. And there's no need when you're starting out. Just ride the roller coaster. Who cares about the ups and downs? Just because you're not going to touch that money for decades.
Sure.
So I think the more bonds you have in your portfolio, you're just lowering your how much you can make. So I think just go 100% VTI or VTSAX. That's the mutual fund of that. So.
Would there be like a target, like for me, right? So I actually did start off with VTI, ironically. That's why I was so hyped
Mhm.
when you mentioned it, right?
Yeah.
It started off with VTI. The reason being for me was when I knew I had to start investing. And
Hmm.
I had a fear of invest. I had a fear of losing money, right? Like anybody else probably out there.
Oh
And
yeah.
so the question became, well, I know I have to get in the game, but where? And
Hmm.
of course, it came down to then indexes and ETFs and taking a look at, the lowest the fees for these indexes, ETFs. I found VTI, fell in love with VTI. I started building this position. And what it ultimately for me came out to be was this investment foundation. That's what I like to
Hmm.
call it. So I built this massive investment foundation for myself. And as I started to feel more comfortable, I said, let me start putting some building blocks on top of this, right? So I'll be a
Right.
little bit more risky, if you want to say, with Apple.
Hmm.
Apple is, of course, I'm using Apple Computer, my iPhone, Apple Watch, I'm all Apple. So if I'm buying all the products, why not invest into the company? I bought Apple. And then I started building this big Apple position. One block after the next block, I started now my portfolio. So would you recommend that people have, more than just an index in there, or would you share that, hey, looking back, I would just stick to indexes and ETFs?
It's hard to say. I think for cash flow, I think an index, unless you're talking about an SCHD, you're going to have twice as much in your account at least. You're going to have twice as much VTI to
Sure.
have the same dividends as like an SCHD. So I think that's one of the reasons I know Jason Fieber gave was why he was an individual stock investor was he wasn't getting the yield high enough compared to what an index was. And I was kind of in the same boat you were, where I dipped my toes into it and I started buying individual stocks, more blue chip, things like Procter and Gamble, Apple, Exxon. I bought Exxon when it was like in the 40s after COVID. And it kept it going down. I was like, oh no, you don't know what's when you're in it. And so my fear was I'm going to put all this money into the market, these individual stocks, and it's going to underperform the index. But I found out though, I have about 70 different positions, and I think it's performing the same, if not a little bit better than the index, with a much higher yield. The yield is over 3.5%. So I'm kind of having my cake and eating it too. Uh, so that's why I like
That's
to, yeah,
Jason. I'm a huge fan of Jason as well. I actually, it's like similar story. I came across that he had an email that was going out some years ago. He still sends them out. I think it's dividend and income email that he
yep.
has.
Hmm.
Anyways, I was reading and I got one of his emails. He's him and Andre Jick, who you may be familiar with as well, one of the big YouTubers out there.
Yep.
They both kind of inspired me to start my YouTube journey and share my dividend investing journey. But with Jason, and I love Jason to death, right? But when me and him had that talk, he was like, I am all about the more holdings in your portfolio, the better. And this is such a heated topic. I feel like a contentious topic. Like,
Sure.
do you have less positions that are more
Mhm.
qualitative? Do you have more positions? And I like Jason's take, and I love Jason. I'm curious to know yours in terms of how many positions
Mhm.
should be in your portfolio. How many do you personally have? I guess we'll start there.
Yeah, right now it's 70 positions I have in my dividend growth portfolio. So outside of it in Vanguard, I just have like four different ETFs
Okay.
from international stock, international bonds to US stock to US bonds. That's it. So, but I think it's kind of a Goldilocks factor of what feels right for you. There are some people who will comment on my videos and say, well, why not just buy an index? And I told them, well, I do have an index, but I think having the individual stocks, I think it keeps me more engaged in it. It's more exciting. And like I said before, I think I'm doing just as well as the index, if not better, with double the yield, over double the yield. So,
Sure. That's it's for me, I started off, when I first started slowly building those positions, 2020 hit. I don't know what came over me in 2020. I
mhm,
think it was just the market was so low. And I'm looking
yeah.
at all the dividend yields and the stocks, and I'm like, buy, 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 buy. My
And
portfolio eventually grew to I think like 40 at 46 holdings total.
Okay.
And and I didn't have right big positions. I'm talking about some holdings were maybe like 3 shares, 5 shares. But I figured right that Jason Fieber approach, let me buy this, let me buy that, have this
Yeah.
massive portfolio. It wasn't too long after that I actually cut a lot of positions down, and
Mhm.
now I'm hovering around the low 20s. I think there's like 3 stocks in my portfolio that are not dividend investments, and aside from that, the remainder are all dividend payers. But I've noticed better results in taking the capital, shifting it into the quality positions with this Bill Ackman approach of like, let me myopically focus on 10 to 12 positions, build them, like build the heck out of them, and then enjoy those dividends coming in, and also have my foundation, right, a VTI. And I'm thinking about an SCHD as well soon.
Mhm.
So it's always interesting to hear, how somebody else is doing it. But you are Mr. 1.4. Forget about the average Joe, right? Mr. 1.4 million.
But in my defense, yeah, some people say, yeah, your portfolio is not average. I think what I have going for me was through my career, I had good health. So I had no, I was constantly working. There was never a time I was out of work, never been laid off. And like I said, I was never a high earner. I started out at $26,000. And right now I'm just in the low 6-figure amount. So it's really just having that gap for decades and investing that gap. And that's truly what it is. It's just that simple. It's time. I think that's the really inconsistency is what's worked for me. So, and I think a lot of people, I think people's investment mentality today is really broken. They're looking for the next meme stock or Bitcoin. And when they hear a story like mine, where it took 25 years to get where I'm at, I don't think it's not very intriguing to a lot of people. It's too long. They want it
Yeah.
now. They want it in 5 years or, yeah.
It's such an issue. I mean, again, as a younger investor, right? I'm 28 years old. As a what I feel as a younger investor, right, compared to the masses, I get that all the time on YouTube. Like, why aren't you just investing in growth? And number one, I
Mhm.
always say I like to sleep at night. I feel comfortable and
Yeah.
confident in what I'm invested into. And I've also, instead of like gambling, right, and getting rich by
Mhm.
Tuesday, that notion of getting rich by Tuesday, I'm
Yep.
actually watching my wealth grow steadily,
Mhm.
and I'm appreciating the journey. Whereas a lot of those who are investing in these meme stocks, their
Mhm.
emotions are up, they're down, they're anything in between, they're losing
Right.
money. And
Mhm.
I'm like, why go through it?
Mhm.
I'm making money. I have my, dividend spreadsheet. Month over month, I'm making more and more. I feel
Yep.
comfortable, day in and day out. I know how much money is supposed to come in. I know how much money does come in. What would you share with somebody? Let's take your son, who, I'm sure is watching, you make your investment moves. Perhaps he's already invested, but what advice perhaps would you give him, or anybody else, right, who's just perhaps a little bit too nervous, or they're on that growth, investor mindset where it's like, let me just get rich right now? What piece of advice would you share with him or her
Yeah,
to get them going here?
yeah, he's aware, he's watched some of my videos and things like that. So he's aware of it. And he has one investment right now, and that is in VTSAX.
All right, he's already on the track.
Yeah, so that's what he's invested in. But he did have some individual stocks. He did some playing around. I think he lost a little bit of money in it and kind of gave up. Not a lot. We're talking a very, very small amounts. So I
Hopefully
think he
not
just
20 years.
no. I think he just dabbled a little bit to know he didn't like those ups and downs.
Sure.
So
Sure. Now, so he has one share. Do you often talk about, positions, or does he have interest in growing the portfolio? And how do you advise him on his positions?
well, I with him and his mom, we have the same advice, and that's just VTSAX all the way.
Sure.
And we're just going to advise him once he gets his job out of college. He's still in college. He just finished his first year. We're going to try to get him to save as much of his salary that he can and invest it. We'll probably shoot for half. We'll see what he's making out of the door, but that's going to be our advice, and that's going to set him up pretty much in 10 years. If he can do that, save half of his income, he's going to be pretty much financially independent. I think at that point, and he's going to have a lot of choices or opportunities of what he can do. So a lot of freedom.
I love that because I also feel when it comes to FIRE, right? Financial
Mhm.
independence, retire early, or people even talking about this notion of passive income to gain financial freedom. I feel like there's
Right.
a stigma there. That's all of a sudden you make it financially free and that's it. You're done. And I want to share because you mentioned your hobbies as well. And we were talking briefly about your hobbies.
Mhm.
The real magic, really, of passive income is the ability to not necessarily retire just to stop working, but to do what you want to do and know that you can do it comfortably. What's it like at this point for you? At like you have your 1.4, the 750,000 right in the account. It's like you're still working, but in the back of
Yeah.
your head, you can take it easy. What's that feeling like?
I sleep well at night. I don't have a stress for money. Um, so that it's not really, if something did happen, if I were to lose my job tomorrow, or something else were to happen, if my car was destroyed and insurance didn't cover it, whatever, I would be fine. So the only thing I worry about is your health. That's the only thing you really can't control. But money, it's not really a factor or worry for me anymore. So
I love it. Ladies
yeah,
and gentlemen,
less
investors,
stress.
the power of passive income and
Yeah,
financial freedom. I will throw
exactly.
a curveball your way with this next question.
Okay.
From your experience in investing, I mean, again, nearly 30 years, 27, I think, to be exact, of investing, when is it time to sell a stock? Like what would be your golden rule of thumb? When's the time to
Okay.
call quits and to sell it? And we can even use like an AT&T here, right? Like,
Yeah, it's this will only really apply to dividend paying stocks. My main rule is if they cut or suspend their dividend, they're out. I will just cut them out of my portfolio. And since I've been doing my videos, I don't think there's been a stock that's cut their dividend. Some have had really low increases, like a Walgreens, but so far that hasn't been the reason. But if it's underperforming, like in the sector, possibly, and I could pick up something else in the sector, maybe then I will sell it. But I I don't have any growth stocks, with the exception of Nvidia, which has performed quite well for me lately.
bravo on that investment.
Yeah, yeah, it's been done
I
quite.
I got in on Google. It was
Mhm.
when it was in the 80s, and then I was like
Oh, well,
I was like so hesitant because I was like, it's not a dividend stock. I want to remain
mhm.
a dividend investor purely, but Google made it in, and it's been a phenomenal investment. I'm sure Nvidia likewise for you.
Yeah, yeah,
Which
it's like
begs the
triple.
question. So, okay, a dividend stock, they cut their dividend, they're out.
Hmm.
It's out.
That's one of my
On,
rules. Yep.
on the
Hmm.
flip side, what what gets your attention with a dividend stock? What is kind of one of the green means go signs for the
Yeah,
average Joe to say this one? I'm going to add it.
I know, like the dividend diplomats, I'll plug them. They have their stock screener, and they look at things like the PE ratio, the payout ratio, like consecutive dividend increases, things like that. And I'll look at the dividend growth too, the 5-year dividend growth of a stock, and something like an AbbVie it checks all the boxes where it's been growing quite well over the years, and also they've been increasing their dividends. You're kind of getting both, kind of same with like a Home Depot, Lowe's as
Sure.
well. So those are ones that kind of check all the boxes for me,
Sure.
where there is stock appreciation, and every year they're kicking that dividend up 5% or more.
It sounds like a lot of the blue chip players.
Exactly. Yeah, nothing risky. So, and I know on the flip side, the growth may not be quite as high or as exciting as an Nvidia or Google, but I'm willing to trade that because my philosophy changed too, where I don't want to sell any shares. I just want to live off the dividend income. And so I just collect the dividends instead. So
Sure. I don't even think we touched upon this yet. We know the 1.4 million portfolio.
Mhm.
Fantastic, amazing. But how much is the dividend income from a portfolio like this?
The monthly average right now is over 3,000. That includes the IRA 401k and the taxable stock brokerage account. It's like 3,300 a month is the average. So
So
yeah.
for those watching and for those investors out there saying just chase the yield, it's all about the yield. We are talking about buying some quality blue chip
Hmm.
stocks, not
Right.
necessarily the highest dividend yield, but
Hmm.
reliability.
Correct. Yeah, because you don't want your income to be stagnant. And there are some positions in my portfolio, like an OHI, Omega Healthcare, they pay like a 9% dividend, but it's been stagnant. So uh, probably, I mean, it's okay for steady income, but it may not go up. Who knows?
I
So
also feel like when you have the ability every month, at least for me, like, in the very beginning, I know it might be hard when you get a dividend paycheck. It's $3.25 or,
yeah,
$1.05.
yeah.
I
Hmm.
somehow, right, like even when I started YouTube at the very beginning, it was like, and I made from Stag Industrial
Hmm.
$3.84 to be
Yeah.
that excited about it. But at the end of the day, right, this dividend snowball is rolling. And I think we have to be cognizant of, like, without stagnation, when there's no stagnation there, you are able month over month to
Hmm.
see the power of the dividend snowball.
Right.
And that rolling of the snowball, at least for me, gives me a lot of confidence to keep doing what I'm doing. Is similar experience for you, or?
Exactly. When I started doing the channel, my portfolio, the dividend portfolio was $18,000, and now it's over $200,000. So yeah, like you said, that there were some low dividends under a dollar, quite a few of them, but you look back and you see the progress, and it's great. And that's why I wanted to have these videos so people could see, they could start from the beginning, and then see how it's grown. So. And I like to track the progress too, like you touched on before, of just tracking those dividends and then showing them how they're going up month over month, quarter over quarter, year over year.
Yeah.
And
It's
it's
as you're
motivating.
saying that, it actually, advice from my father came in, and my father always used to say, and still says today, what gets measured in life gets done. And I loved
Uh,
when he said it, and I've ran with it ever since. That is a part for me of being a dividend investor. Like, I'm measuring every month how much dividend income is coming in. I'm reinvesting typically the
mhm.
dividends. And moreover, because I'm aware of how much is coming in and the power of dividend investing, it fuels me to keep going and reach more milestones. But with that, right,
Exactly.
I want to throw this over to you. And who would be your inspiration, your financial hero, or even, it doesn't even have to be someone in the financial sector, right? But
Sure.
someone that inspires you to keep going, because it really does. I mean, from very, very humble beginnings, plasma to buy groceries, the portfolio that you have, you're inspiring now others on YouTube to make, passive income and go and be on this journey. Who is inspiring you these days?
There's a few. J.L. Collins, he wrote the book, The Simple Path to Wealth.
Yep.
And that pretty much, to sum it up, just invest in VTSAX and get into bonds later on. But he was quite influential, and especially just his attitude of the market ups and downs. Because once the market is dipping, a lot of people, you just want to stop the bleeding sometimes. Like, "Oh, do I sell it and just put it in cash?" Or and, and a lot of people think it's quite natural, but you have to do the opposite. You got to flip that and start buying more instead. And that's one of the financial mistakes I made in 2007, 8, when the market was tumbling. I actually moved in my 401k, I moved out of stocks into like bonds, money market. And I sat there for a couple years and missed out on some of the climb back up after 2008. So that was one mistake I made. So
Speaking of mistakes, I want to ask, your biggest mistake. If that was the biggest mistake, then we've nailed
uh,
it. But
yeah, I think so. Yeah, that's probably the biggest mistake. The second biggest mistake I made was a rental home I bought at just the wrong time, which is 2007. So I paid a lot of money for it. I was at the top of the market for it. And since I had a kind of a construction background, I was able to fix it up, got
Sure.
renters in there. Then I had an issue with, I had to evict two renters in a row, and I kind of had enough. And because I was only making a couple $100 a month extra on top of that. And when you put vacancies in there and capex for a house, that house really was not cash flowing, even though it was. I think a lot of people who do own rentals, I think they kind of paint a better picture. I know a lot of people do make a lot of money at it, but I think some people kind of make it rosier, their numbers rosier than what they
Sure.
really are.
That,
So I got
that's
out of it,
good.
no rental. Yeah, because so much has to go back into that home for capex. If
Yeah.
you're clearing 500, at least 250, 300 has got to go back into that home for capex and vacancies too. So there's a lot of hidden costs in there. So
Did this lead you to at all to jump into REITs, real estate investment trust, or would you advise now, like, hey, stay away
yeah,
from real estate, physical real
no,
estate?
no, no, no. Just not individual real estate you have to manage. So I owe realty, I think, is the biggest REIT that I have in my portfolio. I've got several though.
Yeah. All right. On the flip side of this coin, what is the biggest, I want to say, the biggest investment that you've made that has paid off, literally paid its dividends, or the greatest investment that you've made? And I'll say that it doesn't have to be in the stock market. If it was, investing in yourself, I think so many times we as investors, right, our biggest investment, just throw money in the market, money in the market. But
Hmm.
you also have a life outside of the market that I feel also fuels, right, your drive and your growth in the market. So I'll leave that as a general umbrella there for you to answer. But what was one of your greatest investments?
Just, I would say consistency, not necessarily an investment, but just kind of a practice of always contributing to my 401k and never withdrawing from it. And just going back to good health. That could be because of my fitness with cycling and things like that, that kept me able to work maybe more, and not having illnesses, because health is really important.
Sure, sure.
So,
I can't say enough. Like I have, for me personally, I have outside of my brokerage account, right, other funds, and I also
mhm.
have then what I like to call a lemon fund, right? Because life
Yeah.
always happens, and when life
Hmm.
hands you lemons, you got to make lemonade. So I have in that fund, right, enough money to last me 6 months just in case anything
Hmm.
happens, health
Yep.
wise. I don't know, whatever could happen. But I'm assuming you have also a lemon fund. Would
I
that
do.
be your first step before even investing?
I would, it depends. It really, like Dave Ramsey says, you should have at least 1,000, but that's probably too little. I think you probably need at least 5,000, but it
Yeah.
depends too on how many dependents you have if you own a home. But if you're single and renting, you probably just a couple thousand is fine. You probably just think about the worst case scenario of what could happen. Your engine falls out of your car or whatever. It's gonna be a couple $1,000s.
Yeah.
Just you need to have that on hand. Or if your tires are getting bald in your car, you better have, close to $1,000, whatever it's going to cost, on hand to pay for those things, or save up for them ahead of time. So
Sure. I love it. You're like, you don't really know what's going to happen. Your engine might fall right out of your car. It's okay. You
yeah,
walk, you just walk.
yeah, yeah. And that's one thing I think in my investment journey, is I probably carry too much cash, but because I carry at least a year of expenses. And right now I'm holding way more than that because of a down payment I have to put onto a home I'm building. But
Sure,
at least I'm getting 4.5% interest on it, but it's
sure.
still, it's uninvested until, yeah. So,
So I want to speaking of now your home, right? You got
mhm.
mortgage rates that are off the charts these days. Well, we're going to go into the direction at this point of the remainder of 2023. And I always like to get an understanding of where other dividend investors are. I think a lot of my viewers appreciate different perspectives on how people approach the market, especially during
Mhm.
times of volatility. When times are good, that's incredible. It's amazing. But when times are
Yep.
bad, what do we do? And I think right now we're at a pretty pivotal moment in 2023, right? I want to say that as of a couple of weeks ago, we had Jerome Powell at a forum in Europe sharing with us that he foresees a significant downturn. We've had politicians come out and warn us about this future downturn. We've had economists and CEOs. We've had a lot of insiders selling recently.
Mm.
Now, we also had inflation notched down from 4% to 3% as of last week. So what I like to say, a battle won, but the war is not over because of those interest rates that may rise. Now, a lot of us think that we've reached the peak in terms of interest rate hikes. Some of us think that there could be more coming down the way. I think maybe even myself, we might see one more. And all of this for me, when I look into the future to the best that I can, right, into my crystal market ball, what
Mm-hmm.
I see is some volatility coming down the way because I think we've been experiencing this tech rally based on a lot of AI hype. It's earnings season now. It's going to build some more excitement. But our economic reality, in my opinion, is one that is going to be a volatile story based on those interest rates, even just remaining higher, elevated for a prolonged period of time, pressurizing businesses. So now, with that picture in mind, or with the picture that you foresee ahead of us, how are you planning to invest for the remainder of 2023? Are you going to change your approach? Are you going to double down on your approach? Like, what would be
No,
your approach here?
same approach, just dollar cost averaging into my investments.
Sure.
So yeah, no change at all. And you were mentioning all the bad news, but look at the market now. The market is we're still 10% off all-time highs for like VTI, but and SCHD, but still, I think people have gotten, or at least investors have normalized the inflation or the high interest rates now, and any little good news now, and people are just buying on it. So we'll see. We could have bad news tomorrow. You don't know. So yeah, I don't invest on the news. I've just consistently always invested just dollar cost average into it and let my money work for me and not worry too much about it. That's been
This
the
is how I know you're a true dividend investor, because a lot of the times this question may throw some people off, right? Oh,
yeah.
there's a lot of bad news. Yeah, maybe I will change strategy. What I've recognized with dividend investing, whether the market is up, down, anything in between, you
Mhm.
double down on your process. You know it works, and you continue to buy dividend stocks at fair or undervalued prices, and they're going to
Right.
reward you over a period of time. Joe, what would be three positions that you're right now excited about, or that you're looking into more than others, or that you're actually dollar cost averaging into more than others?
It depends. So what I'm doing right now is with M1, I'm just using auto invest. And so I have my 70 positions and whatever is underweighted right now is what I'm investing in.
And
So
M1 automatically.
it does just based on my allocation
Wow.
within my portfolio. So recently, I think it's been Extra Space Storage, Black Hills, Pfizer has been a big one. It's been investing in for me. And back in 2020, M1 was investing in Exxon because it was way down. It was in the 40s, and of course, at the time when I was doing this, I was thinking, oh no, this I don't want to buy Exxon. It's just going down. But it takes the emotion out of it and
Sure.
it's buying the things that are quote on sale in my portfololio.
And
So
you
it's
set the criteria, like do you plug in like, I don't know, P ratio below X, dividend yield
no,
X and Y?
it's not quite that sophisticated. What you do is, let's say you have 10 positions in your portfolio, you
Sure.
could just do 10% per position or whatever position you want, so long as it adds up to 100%. So if you have a laggard, let's say McDonald's in your portfolio is underperforming, it's going to buy McDonald's first to bring it up to the value to the others if you have
Wow.
them equally weighted. So that's kind of in a nutshell how M1 works if you auto invest. You can of course pick the individual stock to put that money in once you deposit it, but I've just been doing it that way, so it's buying a little bit here and there of different things, and that's why I do my weekly video on every Monday morning. I do a weekly buy video and show you what was picked. So,
Every Monday morning.
mhm, yep.
You heard that here first. Every Monday morning, the average Joe is giving away his
Mhm.
stock idea. I want to go back
Yeah.
real quickly to the stocks that it's picking for you. So I'm
Mhm.
purely just with Vanguard. I mean, I'm a Vanguard guy through and through,
Sure.
and kind of, talk about the simple path to wealth. John
Mhm.
Bogle's notion of just buy a broad market index fund and forget about everything else. And
Mhm.
he's the father and founder of index funds. So for me, and also talk about the lowest fees. I mean, Vanguard was there at the start and at the finish line of the
Right.
lowest
Mhm.
fees. Would you recommend getting invested into an M1 or Robinhood? I mean, I've I'm watching other YouTubers on M1 and Robinhood, but I haven't had this spark or inclination to dive in. How did you go
Yeah,
from
it's
Vanguard to M1, or like what pulled you
yeah,
into M1?
I still have Vanguard. I picked M1 just because of the simplicity of it with the pies and how you can allocate, and fractional shares too is huge. So I could just put in 20, 50 bucks, whatever, and my money could be put to work for me. With other brokerages at the time, I started M1, I think in 2017. I don't think there were many fractional uh, shares. You couldn't buy fractional shares with the big brokerages like a Vanguard or Schwab,
Sure.
like you can now. So that's why I went with them, and I've just liked them because there's no fees or anything like that, and you have access to the ETFs of the Fidelity, Schwab, and Vanguard. So they're there. You can buy them at no fees. So I mean, you'll pay the fee of the fund, like the 0.03 or whatever it is for VTI. So
You might be selling me right now on M1.
it's,
Oh wow, I'm thinking
I
about
like it. Yeah.
creating actually another series because I had my series and it was fun for a long while getting to 100,000. But now I
Yep.
have
I watched it.
100,000 and I'm like, well, what do I do now? Do I just start another one? Maybe I'll do Robinhood or M1 and do,
Yeah. No,
another
you're gonna.
100,000, dollar journey. Uh,
That's what I do. Yeah, just add on top of it. Go to your next 100,000. I've been following your journey for I think a couple of years now. When you're Blue Line Finance, and now you're Ari Gutman. So yeah, I've been following it. So
yeah, I'll tell you the
great
quick story
channel.
behind that. I was
Hmm.
working in Manhattan in asset management, and
Mm,
yeah, I feel like I had this reservation to be like, I'm a YouTuber. I make YouTube videos. So I didn't
hmm.
want my name to be out there, and I didn't want my employer to
Yep.
know. So I started as the Blue Lion. And
Hmm.
actually, from an ex-girlfriend of mine, she prompted me to jump on to YouTube. She's like, you got to YouTube your journey. You got to be on there and help people. And so I
Yeah.
started as the Blue Lion because I didn't want my employer to find me and I didn't want her to find me just yet. And I wanted to surprise her when I monetized the channel. So,
Yeah.
it was a fun journey. And now here I am today. I changed it to just Ari Gutman. I figured
Hmm.
I am able to help anybody. And my initial goal from starting my channel, which I'm sure was your goal, just help one person a day. If that's possible, you
Exactly.
do. So I
Yeah.
found if it's my name and people find me and they reach out to me on LinkedIn, which has happened, or Instagram or wherever, I was able to be of service to help people, and that brings me so much more wealth, I think, than just dividends. So
I agree. I was shocked when I had, I think, my first comment where someone actually watched one of my videos. It was a good feeling. And now I have, just over 1,000. It's still a very small channel, but it's very humbling. It's been a great
yeah,
experience. So, and
but at the end of the day, it might like we talk about numbers, right? It might just be 1,000, but just what I
Mhm.
always imagine, even when I had 50, subscribers, 100,
Yeah.
it's like just imagine you're in a room and you got 50 people or 100 people in front of you,
Hmm.
and those 50 people or 100 people go out and speak to two people, and you are impacting the
Right.
world. Like a famous quote that I love said by Hillel was, to save a life is to save the world. And that was a notion I ran with, the YouTube channel. To help someone with investing is to perhaps help a
Mhm.
family, help, a friend that I don't know along the way, right? It's amazing
Exactly.
connecting with guys like yourself who are, on the journey here, able to speak out about your personal stories. Getting to 1.4 million inspires me. And so, Joe, it's an honor to have you on here with me right now. I want to close out with one final question. Are you ready for it?
I think so. Shoot.
You think so for 500 now. So I want to ask you, if I handed you, Joe, $10,000 right now, and you had to buy an individual stock,
Individual stock.
which
Okay.
stock would it be?
Oh, wow. Probably Apple. I'm just going to go safe Apple.
Thrown it all into Apple. All right, not it.
Yeah, can't go
I'm
wrong,
happy
right?
with it because Apple's one of the largest positions in my portfolio. I'm a massive fan of Apple. I accept the answer. Investors, ladies and gentlemen, the average but not so average Joe joining us for a Masters of the Market talk. Just want to circle back here. $1.4 million in total in terms of his investment journey. This is a guy that you must follow from humble beginnings to still a humble lifestyle and making it happen. Joe, thank you so much for joining me. And please be sure to check out his channel. The link there will be down in the description. Joe, again, thank you so much.
Thanks, Ari. It's been a pleasure.